Hello traders, join us in this video as we discuss the critical considerations to factor when trading the pound-dollar currency pair. Trading the pound-dollar currency pair involves an understanding of the dynamics between the British pound and the United States dollar. At the same time, it involves understanding the influence of each of these currencies on both national economies and the global market. The pound dollar is one of the most traded currency pairs in the Forex market, reflecting the economic relationships and financial markets of the United Kingdom and that of the United States. The British pound, as the official currency of the United Kingdom, plays a crucial role in the European and global financial markets. It is historically known for its stability and economic significance, and typically reflects the United Kingdom's economic health and the monetary policy decisions from the Bank of England. The United Kingdom, which is one of the world's major financial centers, and particularly through its capital, which is London, contributes to the pound's global importance. The strength of the pound is influenced by United Kingdom's economic indicators, some of which include the GDP growth, employment figures, and inflation rates, among others. On the other hand, the United States dollar serves as the world's primary reserve currency and is the dominant currency in international trade and finance. The value of the United States dollar is heavily influenced by the United States economic performance, including the GDP growth, employment rates, inflation, and the policy decisions by the Federal Reserve. The Federal Reserve, that is its monetary policy, including interest rate changes and quantitative easing measures, significantly impacts the value of the United States dollar. The dollar's strength is at the same time influenced by its role in global trade, and this is because numerous commodities are usually priced in United States dollar. There are numerous factors that influence the fluctuation of the pound-dollar exchange rate. One of the critical factors is the differential in interest rate set by the Bank of England and the Federal Reserve. Typically, higher interest rates in one country relative to another often attract foreign capital, leading to appreciation of that country's currency. Conversely, lower interest rates may lead to depreciation. Furthermore, macroeconomic indicators such as inflation rates, employment data, and GDP growth play a significant role in determining currency values and fluctuations. For instance, a higher inflation in United Kingdom relative to that in United States might erode the value of the pound as compared to that of the dollar. Political events and economic policies also have a profound impact on the pound-dollar exchange rate. Brexit, for example, had significant implications for the pound due to the uncertainties surrounding the United Kingdom's economic future and its trade relationships with the European Union. Similarly, fiscal policies in the United States, including government spending and tax policies, influence investor perceptions of the United States dollar. Geopolitical events and global economic conditions, such as trade tensions and financial crises, often lead to heightened volatility in currency markets and affect the pound-dollar currency pair as they affect other currency pairs. As such, economic traders, forex traders, or generally market participants use a range of strategies and tools to trade the pound-dollar currency pair effectively, as or in the same case as they use to trade other currency pairs. They often analyze economic data releases and central bank statements so as to gauge future currency movements. They also utilize technical analysis, which involves studying historical price charts and patterns to gauge or to forecast potential price movements. The other tool that is often utilized by traders is market sentiment, which is often driven by news and global events to gauge or to help them to determine the currency fluctuations or price valuations. It follows that traders have to stay informed on both domestic and international economic developments so as to make well-informed trading decisions before all as they take their trading positions. Traders have also to take note of correlations. We have to mention that correlations between different currency pairs and economic indicators also have an impact on pound-dollar currency pair. For instance, there is often a negative correlation between the United States and commodity prices such as oil and gold. Typically, when commodity prices rise, the United States dollar may weaken as the cost of imports increases. Similarly, fluctuations in the Euro-USD currency pair can also influence the pound-dollar currency pair due to Euro's role as a competitor to both the pound and the dollar in the Forex market. Furthermore, movements in global risk sentiment can impact the pound-dollar currency pair, and this is because investors may shift their capital between currencies based on perceived risk and economic stability. From these observations, it follows that trading pound-dollar currency successfully requires a well-defined trading strategy and a disciplined approach. As a matter of principle, traders should begin their day with a clear plan and focus on key factors that influence the movement of this currency pair. The first thing involves starting out by analyzing global economic calendar. As we have outlined, the pound-dollar pair is highly sensitive to economic data from both the United Kingdom and the United States. The key indicators to watch include the UK's GDP growth, inflation rate, and employment figures, as well as similar data from the United States, such as non-farm payrolls, the Federal Reserve's interest rate decision, and inflation reports. The next step involves conducting a thorough technical analysis of the pound-dollar chart. Here, traders have to identify significant support and resistance levels. They also have to identify trend lines and key technical indicators like moving averages and RSI, among others that they might utilize in their trading day. These tools will help in pinpointing entry and exit points and gauging the overall market trend. For example, if the pound dollar is approaching a major support level and the relative strength index indicates oversold conditions, it might present a buying opportunity. At the same time, traders have to monitor geopolitical events and market sentiment. We also have to mention that traders have to stay informed on these factors throughout their engagement with the market or as they trade the Forex market. They also have to adhere to a disciplined trading plan. What we mean is that they have to set out clear trading goals for profit and loss and stick to them. They have to implement stop loss orders so as to manage risk effectively and ensure to avoid emotional trading decisions or avoid making trading decisions by influence of the emotions that are brought about by the market. I would like to finalize by outlining that approaching trading day with a structured plan focusing on economic indicators, technical analysis, and market sentiment plays a critical role in enhancing a trader's chances of successfully navigating or trading the pound-dollar currency pair. Thank you for watching, and let us interact again in our next trading video.